going on, guys? Welcome back to another video. In this video, we're going to be talking about NIO. So the main focuses of this video are going to be on NIO's next generation battery swapping stations. We've gotten a little bit more information on the testing of these battery swap stations and when they will be out in the market for NIO consumers to use. We're also going to be going over some unusual options activity in the NIO option chain. Now, NIO has earnings coming up on March 1st, and options are a great way to play the typical run-up a company has into their earnings. But in the current market conditions, we may have to alter some of those strategies because the overall market at the current time is pretty weak. So I'm going to give you some strategies on how to make a little bit of extra money on your NIO shares by using options, and give you guys some other options plays if you want to be more risky. We're also going to go over some of the new institutions that have bought NIO. So before we get into all of this juicy information, if you guys enjoyed this video, make sure you go down and hit that like button and hit the subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. So if we come over and take a look at the chart of NIO, this is going to be the last week of trading. We can see that it was trading up in the $55 range, and it has fallen all the way down to $50.86. And after hours, at the current time that I am recording this video, NIO is trading at $50.01. So there has been a massive sell-off in NIO shares, and there are a lot of different ways that we can position ourselves to make the most amount of money that we possibly can with the given market conditions. So NIO has been putting a heavy emphasis on their battery swap model. It's a little bit different than what we've seen with a lot of the other electric vehicle car makers that focus a lot on recharging their batteries. NIO has a slightly different business model, and it's very good at getting customers through the door for the initial sale of the NIO vehicles. When you initially purchase a NIO vehicle and you engage in this battery swapping program, you get a $10,000 price decrease about in the price of the vehicle, and you're actually like leasing out the battery from NIO. Now, if we come over here, we can actually see that NIO began testing second generation power swap station, which was unveiled on January 9th, and it's progressing well on the project. The electric vehicle startup has completed verification and has begun testing of new battery swapping station, with formal deployment expected as early as April. This would be very good news. If NIO is able to get multiple battery swapping stations out in the market, we could start to see NIO's revenue increase, and we can get some consumer feedback to see how the customers like this type of business model. Now, it was also noted that CEO William Li and their president were reportedly present for the testing. This battery swapping model sets NIO up for a pretty massive partnership. As we saw a couple of weeks ago, we can see that oil giant Sinopec chairman visits NIO battery swapping stations. So oil manufacturers and gas stations are having issues right now in the world climate. Everybody and all the governments are starting to put a heavy emphasis on more sustainable energy. We're seeing it in the United States right now, and we are seeing it with the growth projections of electric vehicles. So Sinopec is trying to adapt to the current marketplace, and it seems like Sinopec and NIO are going to ink a deal in the near future where NIO's battery swapping stations will be present at the gas stations that Sinopec owns. This would be absolutely amazing. We'll see NIO battery swapping stations all over China, and once NIO expands into the European marketplace, and as we've seen, they want to expand into the US marketplace, we could see these battery swapping stations actually pop up at some massive gas stations. We could even see Shell, Exxon, Mobil, any of these actually have these NIO battery swapping stations once NIO is able to get a large footing in these new markets. Many large institutions are also very bullish on NIO. So coming over here, we can see that Baillie Gifford has the largest position size out of all of the institutions, with a position size of almost 108 million shares. Now, they in the past have given NIO some very aggressive price targets due to their models. I think their price model actually has NIO at a price target of $100. Now, that is very aggressive. BlackRock has a big position. Vanguard has a big position. The Bank of Montreal. Citadel has has some puts, calls, and shares if we look throughout this sheet, and Goldman Sachs has a very substantial position. So there are a lot of big names on this list, which is usually a very good sign for companies going forward. When big institutions are putting a lot of money into a given company, it usually means that they have a lot of confidence for the company generating profits in the future. NIO is going to be reporting their earnings on March 1st. And if you guys have watched any of my previous videos where I talk about my options trades, you know that I love to trade earnings with options. So there are two strategies that I use to trade earnings. One of them is actually trading the earnings event, but when a company like NIO has such a high implied volatility, I use a different strategy, and that is, I call that one playing the earnings run-up. So essentially what I do is I pick an expiration date that is usually 2 or 3 weeks after the company is set to report their earnings, and I buy these contracts about 2 to 4 weeks before the actual earnings date. So this actually is a kind of a perfect storm, because when the company starts to run up in share price, the implied volatility increases as well, which sends the price of these options really high. And since these contracts have an expiration date 2 or 3 weeks after the company is actually reporting, the theta decay does not affect these contracts as much. But since there is a high implied volatility, the value of the contracts massively fluctuates day to day. So you have to know exactly what you are buying when you are trading these earnings strategies. Now, since these are super volatile plays with a low profit percentage, sometimes with a very high profit potential, so 1,000, 2,000, even 3,000%, I never put in an amount into an options trade that I am not fully willing to lose. So options are extremely risky, and I would say that you need to know exactly what you are trading before entering an options trade. And a perfect way to do that is to open a paper trading account so you can see exactly how these options move. But for NIO's earnings coming up, we are seeing something very similar happen right now in NIO's share price that we saw before NIO had its demo day. So we can see on demo day that NIO had a very substantial run up in the weeks prior. So demo day happened on about January 11th, and we can see before NIO went on an absolute moon mission that it had a very substantial sell-off. So NIO was trading at almost $50, sold off to almost $44, the low $44 range, before going all the way up to $60. Now, the market conditions right now are slightly different, and we are seeing a lot of price weakness throughout everywhere. So all of the major indices have been down, and a lot of the hyper growth stocks have been taking a massive hit. So since NIO and all of these hyper growth stocks are super volatile right now, these options trades are going to be extremely risky, but you can pick a couple of option strategies that are actually going to yield some pretty significant profit without actually risking a lot of money. So if we come over to the option chain, we're going to be looking at the March 19th expiration date, and this is going to be the put options. So the first strategy right now is, since there's such high volatility in the option chain, we're just going to look at the basics, selling some cash secured puts. So if you want shares of NIO at 40 and you think that NIO is either going to be above 40, or you don't mind owning 100 shares of NIO at the $40 price point, you would sell this $40 cash secured put, and you would collect $140 about in order to enter this trade. But you do have to put up collateral of $4,000 so they know that you have the funds to actually execute this trade if the share price of NIO does fall to 40. But this is highly unlikely, but since the implied volatility is so high, you can actually collect some pretty significant premiums on this trade. So I actually had a couple of contracts on NIO. Now, the reason I had these, I actually had these $85 strikes. So the reason for this play was I was expecting NIO to have a very substantial run-up. So I bought these on the first NIO dip, and I bought them for about $1.55. So these are down a very substantial amount, and I don't think I'm going to average down in this position. What I might do is I might buy some strikes that are closer to the money, because I still do see NIO having a substantial run-up into their earnings. Now, I'm still going to follow my strategy and stick to my plan. Morgan Stanley gave NIO an $80 price target. NIO released some great delivery numbers for January 2021, and we still have to see their earnings report for their massive fourth quarter 2020. So I do think that NIO is going to have a very significant run-up, Previously, I was hoping that NIO was going to get to 70 the day before or the day of earnings. I think that is a lot less possible now. We're seeing a lot of price weakness all over the market. So I'm just going to leave these plays here. But since I followed my option strategy, we're not putting an amount of money that I'm not willing to lose. I'm perfectly okay with this play going to zero if it happens. I only put about $250 to $300 into this options trade, and I have a lot of other trades out on the table right now that are looking very promising. So we're going to have a Discord coming out in the near future where you guys are going to be able to see all of my trades, and we're going to be able to talk about everybody's position. So make sure you stick around because we're going to be releasing that within the next month. Additionally, if you are more familiar or advanced with options, you can actually do some put credit spreads. Essentially, what you would be doing is you have to put up a certain amount of collateral in order to make this trade, but you collect a significant amount of premium. So if you guys want to see a video on how to trade credit spreads, just let me know in the comments and we can make that our third options trading lesson video. But that is going to be it for this update on NIO. I do think the price is going to turn around very soon. I think a lot of institutions and retail investors are going to see this massive dip in NIO and just go all in because NIO is a great company for the long term. We're seeing them expand into Europe, coming out with new technology and plans for expanding into the United States. So that is going to be it for this update on NIO. If you guys enjoyed the information that I provided for you in this video, make sure you go down and hit that like button and hit the subscribe button and turn on that notification bell so you're notified every time I post a new video so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. So I hope you guys are having a very profitable day, and I'll see you guys in the next video.